Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. I'm pleased to be joined by my colleague, Ben Jones, Senior Director for the Nasdaq Fund Network. Ben, it is great to have you back on the show. Welcome to Trade Talks.
Thanks, Jill. It's good to be back on today.
Also great to see you on the NFN side of the house as well. And we've seen a lot of growth in ETF models and model portfolios in general over the past few years. For the audience members who are not familiar with these vehicles, can you describe what a model portfolio is?
Sure, absolutely. So we think about an ETF model, right? It's essentially just a portfolio of exchange-traded funds, and these models are constructed and managed by a professional investment manager, and they typically are constructing them for a specific purpose, right? Either designed to create a target outcome or meet a certain objective for an investor. Lately, we've seen the rise of these strategic models that are targeting different risk profiles. With the rise of different themes lately, you've also seen a rise of thematic ETF models, but the reason why we've seen this type of growth, Jill, is because they provide scale for advisors to use. They also are able to harness the expertise from different investment managers, so essentially outsourcing some of the investment making decision process. And also it gives advisors the ability to really focus on two important aspects, which is client acquisition and client retention. In terms of the way that advisors access these models, Jill, they typically access it several ways, right? You see different model marketplaces, turnkey asset management platforms. Even certain asset manager websites have models behind a gate or a paywall, so to speak, and also different research platforms.
BlackRock just registered its target allocation ETF models on the Nasdaq Fund Network. What does it mean to be registered?
Yeah, exciting times for NFN, right? So this is NFN moving towards really being a data provider in the model marketplace or in the model segment. So what does it mean to register? So NFN, it's a registering, pricing, and distribution service, right, that covers thousands of different investment products. So think, mutual funds, UITs, et cetera. And so the NFN service basically facilitates and collects and disseminates or distributes this data out into the marketplace. That's distributing, net asset value and strategy level reference data across the marketplace for all those different investment products that I mentioned. And so what does it mean to register? Well, issuers in the service basically register their products on the network, and they receive a unique identifier, which is often referred to as a symbol, right? So they receive a symbol for their investment product. And so where does this data go, Jill? Well, after they register, they get a symbol. The service then disseminates that information and all that data out to the marketplace, giving these investable products a searchable function. So you can actually go and search and find that strategy across a number of different distribution channels, whether it's different market data providers, online brokerages, and even media platforms.
And Ben, to wrap up here, this is the first time ETF models have been registered on the platform. What is the future for the space?
Well, it's a space that we're seeing a lot of transformation and growth. There was a stat from Broadridge, I think came out like last summer, says the current market size for model portfolios is around about $4 trillion, and it could potentially go to $10 trillion in 5 years. So you're seeing a lot of growth and a lot of adoption. And the reason for that, Jill, is because it solves a lot of problems. It gives the advisors to generate scale, outsource some of their practice, focus on client retention and acquisition, like I mentioned. But more importantly, from our vantage point, we want the Nasdaq Fund Network to be a provider, a data provider, a service provider in the space, creating more transparency for asset managers so that their strategies are able to be discovered and found by advisors. We also want to validate this space because there's a lot of utilities in ETF models for the end investor with all the positive outcomes they typically see. And so by doing that and standardizing this process, we can see maybe more growth in this space in the future.
All right, Ben, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.